Okay, folks, welcome to another Sunday night. Welcome, Sunday Night Stock Futures Live. A bunch of people are already on. Good stuff. Trader Isaac, hi. Rich, hello. Bob, can you go over Yang? Is this a trade or buy and hold hedge? Okay, that's a good question. We'll go over Yang. Eric, hi. I got your request. TTOO, Eric. I did have a good weekend. I finally got a haircut for the first time in, 2 months. Franklin, good evening. Okay, gotcha. All right. Let's, hey, Denny. Nicholas. Doing well. Hope you're doing well as well, Nicholas. All right, let's get to the futures action. We'll do a quick run through. Then we'll go to the headlines and the economic data that's coming out this coming week. And then we'll do some chart requests. And then before we sign off, we'll revisit the futures, see how we settle down. And let's start with the E-minis. 4-hour chart. These will all be 4-hour charts. Long weekend. I'm sipping coffee right now. I'm going to pay for this later. So we are up at current. Now, a headline came out earlier. I'm going to go over it. Supposedly, this is off of Zero Hedge and a tweet they put out. I did not hear this said. So this is just off of a tweet, which I don't feel comfortable with talking about until I hear it with my own ears, is that Jay Powell said in a 60-minute interview, which is airing right now, that if there's no vaccine by the end of 2021, then the alternative to a vaccine would be the Federal Reserve buying stocks. Now, I haven't heard that. And I played the clip that they had on that Zero Hedge blurb, and he didn't say that. He said everything else they had published but that. So we'll see. But the futures are up. They're coming off the highs now a little bit. So those are the E-minis, S&Ps, 500. Small caps, they are up as well, stronger than the large caps. The NASDAQ 100, up on par with the S&P 500, which is unusual because they have been recently outperforming until late last week. That began to change a little bit. Taking a look at, let's go to the dollar first. Hey, Pat. How are you, sir? Amerimigo, hello. Chuck. John. Hello, all. Hope everybody had a great weekend. And please, I beg of you, smash that like button. Please, thank you. All right, the dollar, holding that 100 level. I went over the monthly chart with members on the weekend commentary. I mean, it's one powerful chart. So the dollar looking very good here. That'll lead us over into gold and silver. We'll go with gold first. Gold up on this session. Spot 2%. A little bit overbought here on a 4-hour basis, but that doesn't mean it can't go higher. But we may pause here. This is a 30-minute chart. This is I believe, a new weekly high anyway. And we are nearing a 52-week high on gold. We could be there by tomorrow, Tuesday. And after that, we're going to be looking at the 2011 highs on gold. Silver just absolutely ripping here. It's up 1%, nearly 1%. But it is overbought here. We have RSI on a 4-hour basis at nearly 84. So this is going to be unsustainable. I want to buy silver back. We sold it And I'm shocked with how it just consolidated quickly and just tore up higher. So we're going to need to wait for a pullback. I'm not going to chase it here. But silver looking outstanding. Oil. See how we're doing here. Everything's up. Oil up big, really big. Up about 1.5%. But again, reaching overbought levels. We can go higher. But by tomorrow morning, we maybe see a little bit of a pullback here off the highs. Okay, let's take a look at the economic data that's coming out this coming week. Okay, tomorrow, the 18th, you have the home building index. I don't expect much out of that number. Tuesday, housing starts, building permits, forward-looking indicator. And even if that number beats on building permits, it doesn't mean they have to break ground. They have the permits. So that doesn't necessarily mean they'll break ground. Wednesday, advanced services. I've never heard of that one. Thursday, initial jobless claims. I mean, they're expecting nearly 3 million jobs this week. I should say initial jobless claims, not new jobs. Market PMI. That's the Purchasing Managers Index. Leading economic indicators. So a pretty buoyant market in terms of an economic calendar. And of course, we'll have our Fed heads out there with Jay Powell tonight. Lord knows what he's going to say. So let's talk about China. We've been bearish on China. We're short of China. We added to our short trade of China last week. I'll go over a chart, which was requested, a chart of Yang, in a little while. You had the president who basically just put the kibosh on Huawei, supplying them components, which is a big, big move. So you had Taiwan Semiconductor announce that they're going to be breaking ground on a factory in Arizona for the next generation of chips. So you're seeing change. You're seeing manufacturing begin to move out of China. We've been talking about this, and the Japanese have been doing it far more aggressively, but now you have big names like Apple moving production of some of their products over to India, other products over to Vietnam. Vietnam and India we're looking as potential investments, very, very long-term investments in the future. And in the short term anyway, we are short of China. And I don't plan on adding aggressively to that short. I think this is going to be a long, drawn-out affair with the Chinese just continuing to lose just the confidence of the world. I mean, it's just absolutely horrible what's happened here. And you have all of these politicians that they're trying to recreate the United States with regulation. They want you to not pay attention to what really caused the virus. And they want you to focus on what we need to do now. Social distancing till infinity. Masks till infinity. There's only one thing that caused this crisis, and that's one word: China. Let's not take our eyes off of that one glaring problem, and that is China. So let's worry about managing China and stop worrying about taking away the freedoms of the United States, U.S. citizens. It's ridiculous what we're seeing out there. And when you take a look at, I've always said this, here's the old Rust Belt. What's wrong with taking the old Rust Belt and saying to any company around the globe, bring your manufacturing back here where we have infrastructure, we have personnel, no taxes, no corporate taxes for 30 years. That's a start. I think we get some traction there. Even the unions would back the president up. He should do that. And with Powell supposedly saying, and here's the article I referenced earlier, and this is a tweet, and this is posted, well, this is the logo for Zero Hedge. This is not Zero Hedge's tweet, but they're publishing it. Fed's Powell says a Fed mandate. As a matter of fact, they were banned on Twitter. But I guess they're using a proxy here. Fed's Powell says a Fed mandate to buy individual stocks and ETFs could be a vaccine alternative. 60 Minutes interview. Now, before I go down to this video here, I'm not going to play it, but he didn't say that in this video that they provided here. And I doubt they had the entire interview. We'll see whether or not that was the case. And, you know, the 1918 Spanish flu, there wasn't a vaccine that was provided to our soldiers. They were the initial ones to receive the vaccine until 1945, until after World War II. Here's a virus that struck during the end of World War I. The vaccine wasn't discovered till World War II. The Federal Reserve didn't go buying stocks, and there were no ETFs. So I think we can get through this without the Federal Reserve going in there and buying stocks, unless, of course, it's not really the flu that's the problem. And, of course, it's not. It's the debt. It has always been the debt. They're blaming the virus. So if he says that they're going to be out there buying stocks in lieu of a vaccine, you can't be short this market. I mean, how are you going to fight these guys? So we'll leave off, and then we'll go into some chart requests with, I feel bad. I disagree completely with with Warren Buffett and his politics. He supported Hillary Clinton. And I don't want to get all political here, and I don't do that with numbers. So, but this is a public forum, and I have my opinion. But you cannot deny the guy is probably the greatest that ever lived. And it just speaks to his discipline. His patience, his discipline is just incredible. And it's very sad to see at his age that the vast underperformance that the shares of Berkshire are seeing of late. And here's a weekly chart. I mean, we're a stone's throw away from taking out the March lows. We're not that far away. And he's not big into tech because he doesn't understand it. He sticks with his knitting. But here's the shares of Berkshire going back to 1994 and how they performed relative to the S&P 500, and just a vast outperformance here. This is a quarterly chart. A vast outperformance as a whole during his time at the helm at Berkshire. And you could see the relative underperformance over the past year or so, a little over a year. So sad to see that this is happening, and hopefully he doesn't break the March lows and he goes out in some sort of a high here. I think he's nearing 92 years old, so wish him all the best. Let's get to some stock charts. Arthur, hey. Eric, it's okay, Bob. Hillary Clinton is objectively terrible. George, Rust Belt 1, 2. Why not why not South America more? I don't know. I'm American. I want jobs to come here. I don't care where they go. I just want them to come here. Okay, let's do some chart requests. Pat, NG. Trisha, I saw your request for Tosco. Did you see I'll go over it again, but did you see the week ahead commentary? Did you want me to elaborate further on something? Because I did go over it on the week ahead commentary. If you want me to go over a certain time frame, let me know, and I'll do a more refined analysis for you. Trisha is a member, so she has access to the commentary I did. So I'll wait for your reply, Trisha, and I'll wait to do yours in a few minutes. First off, I'll go over your first one, which is THO. We'll use our friends over at TrendSpider. THO. Thor Industries. Oh, she's like in big caps here. Industrials. Nice. This is a monthly chart. You're good on TSCO? Trisha? Okay. Let me know if you have one other one. You got it, Will. Okay, so let's take logarithmic off here. All right. So this is a monthly chart of Thor Industries. A really nice chart. So we had a horrible March, as did most stocks. But the month of May, we recaptured critical support at around $64 per share. And this month, so far anyway, we have a new higher monthly high. So what I would do here is I would wait. I think that you're probably going to get a retest of this support level. I like the setup here. Okay. We'll keep this active for a couple of weeks, and we'll see. It may not be, it's probably not going to be a straight shot up higher. I don't think we're just going to go breaking out here. We may, for all I know. But I think that we'll probably trade within this range. And ideally, the dates on here are all messed up. All right. Okay, so ideally, we get a pullback to support. This is wrong. What happened here? I must have hit a button. I thought I was losing my mind. Maybe I am. All right, there we go. Okay. All right, so we have our alert set here. We're looking for support to get hit. And I would buy in that pullback. I think that ultimately you're going to get that. But if we don't, then you buy the breakout. Where that breakout is going to be, I'm not quite sure. But I doubt we're just going to go shooting straight up higher here. We're off the highs of the month. So we have clear and defined resistance above. Here's your trading channel in green. Why do we... Oh, it is right. Okay. So last week was an inside week. No new high, no new low. It's a bit of a stalling action. Daily chart. Nice day on Friday. But I don't like this as a short-term swing trade because you have not enough reward to the upside. If you're going to pull the trigger, use a stop right below Thursday's lows because that would be a break of support if you close down below there and just stop out. But I'm not loving the trade short term. Longer term, I like the monthly setup, and it could be setting up as an investment longer term. So short term, not loving it. I think we've had a nice little run here, and we have a lot of resistance above. Okay, I see what you're saying. Then, Trish, I would wait for the pullback, and then I would start nibbling at that support level. We'll keep an eye on it. I like, let's go back to the monthly chart. This is a big trading range. Let's do this. You know, if you wanted to look for an entry point here at support, 43.61, I know it's a big pullback, but I'm just not seeing the entry point, even for a long-term hold at current, without some risk. serious risk of a pullback. I'll tell you, the price action off the lows of March, extremely impressive. But I don't know how much fuel is left in the tanks before hitting resistance. Again, we'll keep this active for a while. So you have support level number 1 at around $44 per share. Support level number 2 at around $33 per share. And you're right at resistance. I can't say buy the shares. Too much risk. But longer term, I like it, but just on a pullback. You're welcome. Manoj, MKC. McCormick. Another good one. This looks to be an all-time high on McCormick. Yep. It's a nice chart. This is sweet. You have support at 174.38. That's the breakout point. And I think that at some point in time, you're going to get a pullback and a retest of that level. Again, this is another one where I like it longer term, so we'll keep this active for a while. And the reason why I like stocks that are making new all-time highs is because you have no overhead supply, no resistance above. The only thing that creates resistance above is when you have profit taking, you pull back, and that creates the new round of resistance. But at current, you don't have it. Weekly chart. Nice breakout. You can see that TrendSpider extrapolated out potential resistance levels above. And you have a nice, healthy risk-reward trade here. Especially if you can get the shares on a pullback to support. RSI is rising, Stokes are rising, daily chart. We close off the highs of the day on Friday. I think that the odds are very, very likely you're going to get a pullback and a retest of this breakout point. And it's at that point you'd want to open up your trade or add to it. Yeah, the back half of the day on Friday, you saw some sellers move in. Allow the shares to come in here. As a matter of fact, let's do this. Let's get rid of this one. And create a new one here. Using a 4-hour chart, because I think that we're probably going to get a retest fairly quickly. I have to make these notes to myself, or else I spend too much time reanalyzing. I don't want to do that. So we'll keep this active for a few days. And we are good to go here. All right. GDX. What a beast. You're not kidding. Oliver, welcome, buddy. Smash the like button. Yes, thank you. Keep reminding me. A lot of requests here for AMD. So let's go over AMD. I know, Pat, you wanted nat gas, if memory serves. Yes. Well, you brought it up. Okay, so we'll go over nat gas since you're curious. And, yeah, we'll talk about silver. Well, actually, silver I went over. Yeah, we'll go over silver because I like it. Just keep in mind, it's up 1% at current. So let's go to AMD first, and we'll circle back to commodity names. AMD. Let's pull back here. Yeah, this topping action is haunting. The semi sector as a whole did not fare well last week. But you had individual names like NVIDIA, new all-time highs last week. That's a stock that we're watching. So you have individual names that are still outperforming despite the fact that you have some weakness in the sector. We're consolidating here. This is a weekly chart. I think that if you can get the shares at around $51 per share, $52 per share, that's a good entry point with a stop right below the $51 per share mark. That'll take you out small loss if you're wrong. And then add on a breakout above. I would go with this a resistance level here at 57.92. If we break out and close above that level, in all probability, we're going to take out the highs. Daily chart. Yeah, you can't buy the shares right now because where we closed is right at resistance. We did close above one resistance level on Friday. I think that if we continue to show strength here and we close again up on the day at around $54 per share, where do we close? We close at 54.20. All right. If we close at, say, 54.50, I think then we would be safe to nibble and then add more on a breakout above 57.92. Let's just take a quick look. Let's go to the 2-hour chart. It's a good looking chart. I think that in all probability, we're going to move higher here. We had a breakout on a 2-hour basis on Friday. We pulled back. We retested, not once, but twice. It's a good looking chart. We just want to make sure it closes up on Monday. That's all. So wait for that final 30 minutes of trade, final 15 minutes of trade, and then you can execute. Bob, if you have time, any ETFs that you looked short the S&P 500? There's a couple of them. Yeah. It's either the Pro Shares or Direction, one of the two. I haven't used it in a while. I'll circle back on that short ETF. I think it's Pro Shares. You may just want to do a Google search. It's either ProShares or Direction, one of the two. But they'll do you fine. One of the two of those. Just be careful with those 3-time leveraged ETFs. I'm not as fond as them as I used to be because of the horrible underperformance of NUGT. Horrible underperformance. There you go. SPXS. That's it. Thank you. All right. Silver. What can you say? Let's first take a look at how we're doing. Have we pulled back? We pulled back a little bit. We're still looking good, though. Wait a minute. That's the SLV. Sorry about that. Here we go. We're about the same. We're still up just shy of about a percentage point on the futures. But again, overbought here on a 4-hour basis. All right, so to the SLV. Monthly chart. Now, silver is a fickle commodity. One day it's traded as an industrial metal. The next day it's traded as a precious metal. Huge month so far this month. Incredible. Now, we broke out and through resistance of 15.38 per share. Now, any pullback and a retest of that support level, that would be a buy. I'm looking to buy the USLV. That's a leveraged ETF. As a matter of fact, I'm not going to use the monthly chart. We'll go to I want to do a deeper dive here. Keep in mind you have resistance right above at 1578. Where do we close? 1551. So we're probably going to spike right up and into resistance tomorrow morning. So you really want to wait for a pullback here. And 1538 looks like a good entry point. All right, so we're good. Okay, daily chart. I wouldn't chase it. Huge gap on Friday. You know, in fact, I want to validate this. I like to use 2 different charts to validate what I'm seeing to make sure that, yeah. So we closed out on Friday above the 3rd standard deviation Bollinger Band. I can't buy these shares. Even if we pull back to fill that gap, I think that we're probably, even if we pulled back to retest this support level here, I don't think that's enough. I think that we're going to need to fill this gap. And silver is extremely volatile. If you don't think it can happen, it can happen. So I would wait for a pullback here on silver. Big volume. It may not come Monday, Tuesday, but I think that ultimately we're going to get it. Because, frankly, this is unsustainable. Trading above the third standard deviation Bollinger Band. Unsustainable. It's not supposed to be there. I'll save the technical jargon. 4-hour chart. Beautiful 4-hour chart, I have to say. Despite the fact that we're trading on a daily basis above the third standard deviation Bollinger Band, it looks as though, in all probability, they're going to spike it up higher tomorrow morning. I mean, beautiful. We broke out the first 4-hour bar, second 4-hour bar. We pulled back. We retest support. It held, and we rallied off the lows of the session. So it looks good. So we're going to have to adopt the behaviors of Warren Buffett here and show a little bit of discipline and patience by waiting for a better price. I can't go just by discipline. I just cannot go buying these shares where they closed out on Friday or higher at current. So more to come here. You're welcome, Chuck. All right, what else do we have? Oh, Eric. TTOO. I can tell you already, I like the 4-hour chart, but let's go high level first. All right, so this is a biotech. So we're obviously in a downtrend here, but your indicators are flashing signs of hope. Now, we broke out or recaptured a support level in August, rallied, pulled back. Now we're doing a retest of that support level yet again. Or we have retested it, and we bounced. So the prior lows from back in August are lows again. Despite the fact that we broke back out, we had a retrace. We're retesting support. This is a very, very good entry point on a monthly basis for speculation. And as long as you keep a stop loss right below, let's call it the lows of April, I think is a lower low than this month, 62 cents per share. Or 45 cents per share in April versus 48 cents per share for May. If you're going to keep a stop loss or at least a mental stop loss below that mark, I'd be fine on speculation of buying the shares. And before I leave here, I want to point out something. That your indicators, I always like to say the market sends you signals vis-a-vis your indicators. And you're putting in higher lows on RSI, higher lows on Stokes, and they're hooking up. So that's good stuff. Now, on a weekly basis, we broke out last week. Above resistance. Very interesting. Do you know what the short interest is? As a matter of fact, let's bring it up. I don't know if they publish it for this stock. They may not even have any short interest at this price. It's a penny stock. But sometimes these stocks were at much higher prices, and they'll still have shorts stuck in them. Yeah. You have just about 4 3/4 million shares held short. The problem is this: is that you don't have a huge short covering potential here because the shares trade on average 12 million shares per day. So there's enough liquidity for these shorts to get out pretty easily. So that's not really your catalyst. You really need to be hoping for product here. And I'm not seeing wonderful numbers to drive the shares up higher. Now, I'm no fundamental analyst, so I certainly don't know what this company does. Maybe you have a better idea than I'm sure you do, what their prospects are. And if you're confident in their prospects and they're a catalyst, well, then the shares are looking good on a monthly basis, on a weekly basis. You have a defined and reasonable downside where you know you could stop out at around 48, 45 cents per share. You break down below those levels, you want out. And you have a lot of upside here. So the risk reward is pretty good, assuming that you have a catalyst. And it's not a short squeeze, and it's certainly not their fundamentals. Now, on a daily basis, I would wait for a rally, a breakthrough above resistance. Or wait for a pullback here to this rising lower band of support. Okay. And there's your parameters. I mean, set it and forget it. If the shares pull back and break the support level, then wait for them to come down here. If this support level holds, you're good to go. But they need to bounce off of this support level or you could do both, break out above this resistance level. And if you break out above this resistance level, well, then there's a lot more upside potential here for the shares. So interesting trade. And what I mentioned earlier, the 4-hour chart was looking pretty good. This is the first chart I took a look at. And we're rallying through resistance on a 4-hour basis. You did see some sellers above, but they closed fairly strong. Stokes are looking good, RSI rising. It's a healthy chart. So technically, it's really displaying some positive performance here. You just need to have that catalyst. You need to know what's coming down their pipeline and then have the confidence to move in there and put your money to work. It's a 3 semi-corona play. Okay, so be really careful with these plays. Oil futures up 2.5%. VXX. All right, let's take a look at SDS. Oh, I think you were replying to the short ETF. Okay, gotcha. All right. Nat gas for Pat. We'll go with the UNG. I didn't take a look at how nat gas was performing. It was very disappointing. Here's silver pulling back off the highs. All right, very volatile. Be careful here with silver. I wanted to buy nat gas, in particular UGAZ, the leveraged ETF, because we were in a nice triangle formation. We broke out. I was waiting for support to get hit down here, and we came just shy of it. But I wasn't going to chase it. I wanted it to come to me. We broke out, and the shares just got clobbered. Now, we'll see whether or not we hold the support level here at around, wow, so we've got a 14 handle closed at in the after hours. So 1488. Interesting. Let's see what how nat gas is trading at current on the futures market. I remember taking a look at the weekly chart of nat gas. It was not good. What was it? NG? Yeah. We're up 4%. Well, right at resistance. So I'll show you what I was looking at on a 4-hour basis with nat gas. This is the weekly chart of UGAZ, leveraged ETF. The UNG is going to look the same. Big break last week. Stokes are rolling over. Pretty bearish stuff. Daily chart. Outside reversal day on Friday. You know, could the tensions with China be causing the spike in fuel prices? Maybe. It's very possible. But at current, just simply going by how we closed out the week and the day on Friday, it was not pretty for natural gas. So we'll see how we open up tomorrow morning and how we close, more importantly. How do we close tomorrow? Do we fade or do we close strong? We'll see. But at current, I'm not liking natural gas. But that could change very quickly. Yang. Okay, Yang. All right, so Yang is our leveraged ETF, putting us short of China. The price action last week was very positive, a bullish key reversal bar. We recaptured support. We added to our trade last week. We're seeing a higher low on RSI. Stokes beginning to hook up, still oversold, but that doesn't mean they can't stay oversold. So we don't rest on our laurels there that we're oversold, we're going to hook up higher. That's a sucker's play. People misuse Stokes all the time. Stocks that are oversold on their stochastics can stay oversold. And frankly, that's where a lot of the damage is done to a share price, when they're oversold. Now, taking a look at the daily chart of RSI, of Yang. I'm starting to get tired here. RSI is looking good. In fact, we broke out. We did recapture a support level on price. However, I'm not going to talk my book here. I didn't like the close. I didn't like the close on Thursday because we backed off the highs of the day. The same thing happened on Friday. We backed off the highs of the day. And Friday's volume was lighter than Thursday's volume. So it leads me to want to take a look at, we'll go with a 30-minute chart. Steadfast day. It held those gains. We did see some selling in the final hour of trade. Wish that didn't happen. Ultimate oscillators hooking up. Mixed bag here in terms of the indicators. Yeah. We closed down below support on a 30-minute basis. But this is so volatile. And I would need to see, there's something called the 3-day rule. And when I'm undecided like I am right now with Yang, while we're up on it, it's a profitable trade, but I'm not willing to go adding more just yet. When would I? I would, going back to the daily chart, the 3-day rule. We spend 3 consecutive days up above that $41 per share mark. Then that's showing signs of stability. It's being retested. It's holding. But at current, I'm a little bit skeptical. Especially, I think that there's going to be a UN meeting on Wednesday. And it's a vote to agree, the United Nations to agree that there will be an investigation into the origins of the CCP virus. It's expected, this is what I've heard through the grapevine, it's expected that although the Chinese are on the Security Council and can veto a lot of what is passed by other members, they're not expected to do so. If they don't vote against that UN measure, then you may see some weakness on Yang, because then the pressure comes off, that geopolitical tension comes off a bit. So, because now they're cooperating, and they're seeing a lot of damage get done to their economy. So I think they're going to want to stop the bleeding a little bit, because they keep shooting themselves in the foot. So just be careful here. You know, I want to talk my book, but I'm a little bit nervous, to be honest with you. Again, I think that the drawdown in China is not going to be a rapid thing, unless, of course, you have a kinetic event that takes place, a military conflict. Then it gets ugly real fast. Absent that, I think it's just a slow bleed over the course of many years for the Chinese. So just be careful here. And with that, I think that's pretty much it. Bitcoin popping. Let's go check out Bitcoin. Bitcoin's up 370. You ever notice that Bitcoin trades with the stock market? It's not a store of value. I don't know how people are coming across that this is a store of value. So Bitcoin looking good here, as long as the stock market holds up. Thank you very much, Baba Papas. Interesting name. Folks, if you can smash that like button, I'd really appreciate it. Thank you very much for spending a little bit of time with me on this Sunday evening. I know your time is valuable. Please stay safe and have a very, very profitable trading week. And hit that subscribe button if you would. Be well.